adding the precious metal silver into your portfolio? Silver has offered good returns during several financial crises. It is a precious metal that gets its value from its industrial applications. You can add silver to your portfolio through silver ETFs to gain from its potential in several industries. Hello and welcome. I am Prarthana from Clear, India's largest tax and financial services platform. At Clear, we have assisted 6 million tax filers so far. Do subscribe to our Black channel to support us and to get to know more about the best investment options to reach to your financial goals. Silver exchange traded funds or silver ETFs are open-ended mutual fund schemes that invest in silver and silver-related instruments. SEBI, the capital market regulator, issued operating guidelines in November 21 for mutual fund houses to launch silver ETFs in India. An exchange-traded fund or ETF is a low-cost investment that invests in a group of asset classes such as equities, bonds, commodities, etc. ETFs replicate a stock market index portfolio such as BSE Sensex, Nifty 50 or commodity index and can be traded on the stock exchanges just like shares. Silver ETFs invest most of their assets in silver and exchange-traded commodity derivatives with silver as the underlying asset. It tracks silver prices based on the London Bullion Market Association. As silver ETFs are listed on stock exchanges, they have no exit load. You need a demat and trading account to invest in silver ETFs. Silver ETFs are vulnerable to tracking error, which is the price difference between physical silver and the scheme's returns. This table is showing the average silver prices from 2011 to 2022 in US dollars. Want to know some interesting facts around silver ETFs? ICICI Prudential Asset Management Company Limited launched India's first silver exchange-traded fund in January 2022. The silver market in 21 experienced a supply deficit where demand outstripped the supply for the first time in 6 years. Silver is more volatile than gold as it is an industrial material. This chart is showing sectors where silver demand comes from. The Securities and Exchange Board of India (SEBI) has introduced guidelines for silver ETFs. Here are some prominent ones. Silver ETFs must have at least 95% of their assets in silver and silver-related exchange-traded commodity derivatives. Silver ETFs must keep their silver assets under the custody of a SEBI-registered custodian. Mutual fund houses must contain the silver ETFs tracking error to 2%. Suppose the tracking error crosses the 2% threshold, the mutual fund house must mention this to its portal. The mutual fund house must purchase 30 kilograms physical silver bars of 99.9% purity conforming to London Bullion Market Association standards. Silver ETFs are benchmarked against silver prices based on LBMA silver daily spot fixing prices. Silver ETFs' total expense ratio must be within 1% of the scheme's asset under management. Silver ETFs are listed on the recognized stock exchanges and the AMCs disclose their net asset value daily on the website. Here's the asset allocation of silver ETFs.
The net asset value or NAV of silver ETF scheme units are calculated up to 4 decimal places using this formula. NAV/INR is equal to market or fair value of scheme's investment plus current asset minus current liabilities and provision divided by number of units outstanding under the scheme on the valuation date.
You must invest in silver ETFs after going through the Scheme Information Document or SID. Contains vital information to help you make an informed decision before investing in silver ETFs. SID discloses the tracking error and the tracking difference of silver ETF scheme. It shows you the market risk because of the volatility in silver prices. SID mentions the risks in physical and derivative markets that impairs the silver ETF scheme's ability to buy and sell silver. It mentions the risks associated with storing and handling physical silver assets. The SID clearly explains the tax implications of silver ETF investments. Short-term capital gains from silver ETFs are taxed according to your income tax bracket if you redeem within 3 years of purchase. Long-term capital gains from silver ETFs after holding for 3 or more years are taxed at 20% with the indexation benefit. Indexation allows you to increase the purchase price of the asset you have sold to reflect the effects of inflation, thereby helping you save on taxes. I hope by now you have understood how silver ETFs are taxed and the SEBI rules governing this investment. Comment clear if you are clear or drop your questions if any. Don't you want to know if you should invest in silver ETFs? Silver is a precious metal, but half of its demand comes from industries. Its performance depends on the industrial growth, which makes it highly volatile compared to gold investments. You can have a tiny portion of your portfolio allocation towards silver ETFs as a part of your growth portfolio. Well, the returns from silver ETFs depend on industrial demand, with its fortunes linked to the industrial growth. In a word of caution, the 10-year compound annual growth rate or CAGR for silver was a mere 2%. Moreover, silver cannot be hedged against inflation like gold investments, as silver and equities move in the same direction over time. The geopolitical crisis due to the Russian invasion of Ukraine has boosted silver prices. Silver ETFs generated an average return of 8% in the past month, outperforming gold funds. Silver ETFs may do well over the next 2 years due to demand for electric vehicles, 5G mobile technology, and the medical industry. Gold is a hedge against inflation and has outperformed silver over several years. It is inversely correlated with equity investments and protects your portfolio against market volatility. This chart is showing gold versus silver price movements. As you can see from the chart, gold has outperformed silver in most years over the past decade. You must have a higher allocation towards gold as compared to silver ETFs. Should silver ETFs be a part of your portfolio? Well, you can consider it as a tactical play or a long-term holding based on your investment objectives. Financial experts recommend investing in precious metals such as gold and silver for the long term. You can have around 5% to 15% of your overall portfolio allocation towards precious metals. You must have a larger share from this allocation towards gold ETFs rather than silver ETFs, as gold is a hedge against inflation. For instance, suppose you plan to allocate 10% of your portfolio to precious metals. You can have 7% towards gold investments and 3% towards silver ETFs. Silver ETFs are a newly introduced asset class in the mutual fund industry. You can follow a wait and watch approach to see how silver ETFs perform over some time. If you are a market-savvy, aggressive investor, you can have a higher allocation towards silver ETFs as its volatility is suitable for the short-term investment strategies. Thank you so much for watching this video. If you have any queries related to investments and taxes, please do comment below. We will address them as soon as possible. Take care and goodbye.